What is up, YouTube? My name is Adam and this is Brokeman Finance. If you have been following this channel for any length of time, then you will know that I am super bullish on the pet industry. Few things, if any, are growing at the same rate as pet products and pet health. There is so much money to be made in this industry. I don't think people realize the level of consistent growth that the pet industry sees year after year. This is an industry that is completely taken for granted. And something else to not let get taken for granted is the links in that description below. Go check those out, and I really hope you find something in there that can help you make money. And if it does, give the video a like, and I hope you consider subscribing. You need to have a piece of this industry in your portfolio to reap the rewards moving forward. Now, in this video, I'm going to give you 3 companies that I am bullish on that is associated with this industry. One may be kind of a surprise, but these 3 companies offer a lot of value and profit potential to their investors. Like a lot of you, I'm an animal person and I love my pets. There's pretty much nothing I wouldn't do for them. There's no amount that I wouldn't spend to make sure that they're taken care of. That's why I feel like this industry is within my circle of competence. And if you stop and think about it, if you're an animal person too, then this industry is probably within your circle of competence as well. Petco is the first company that I'm going to talk about, and a stock that I believe has a lot of growth potential for shareholders moving forward. Petco went public again in mid-January. The ticker symbol WOOF, or WOOF, sorry, I had to, is currently trading for $20.17 at the time of this filming, nearing back to that amount when they first went public. That's when my interest begins to get piqued. However, it's the 3rd time Petco has gone public since it was founded in 1965 as a mail order veterinary supplies business. Both times Petco was brought and taken private, most recently in 2006. Listen to this essay portion from Smart Brief. When it comes to their pets, many Americans are more willing than ever to pull out all the stops to keep them healthy and happy. In fact, the pet product industry has seen year-over-year spending increase 450% over the last 25 years. And consumers now spend $49 billion annually on pet food, supplies, and treats, according to data technology company Spins. And that's not including the health side, the training classes, grooming, etc. In 2020, it is estimated that we spent $99 billion on our pets. Forecast predicts the global pet care market will reach $358.62 billion by 2027. Now think about that number. Looking at companies like Petco, a recognizable and solidified name in the pet industry, it is hard to believe that that share price will not continue to go up. Right now at $20 per share, I believe that Petco is a very affordable share price in this market, in this booming industry. Now, their financials have not always been that great, I'll be the first to admit, but they have gotten better and better, and their last quarter was a lot better than this same time last year. Now, they have also restructured kind of how they're doing things, and they're really getting super focused on pet health and other areas, and they're branching out into other areas of the pet world and not being such just a pet retail store. So I believe that over the next few years, they're going to be very, very profitable. Although I love the online presence that Chewy has, there's just some things that Petco offers that Chewy can't, such as pet grooming, training classes. And although Chewy is working on virtual vet appointments, Petco is taking their in-house vet care to another level, including getting rid of any pet food that has artificial ingredients and that are safe for humans to eat. If I'm looking to invest in a Petco, I'm going to look at several things. One, right off the bat, that share price. $20 looks pretty tempting to me and is something that is affordable. Two, the industry is going to grow and that share price and Petco is going to grow along with it. Why? Because they are restructuring the company, they are refocusing their brand, and they are doubling down on where they see the value is, and I do as well, when it comes to pet health, because people are taking their pets' health much more serious. Now, their finances aren't great, but they're getting better. If Petco can just take a sliver of these billions and billions getting spent on pets every year, there's no way it's not going to move upward. Now, I don't know if it'll move up at the same pace and rate as Chewy did this past year, but that potential is certainly there. Speaking of pet care, let me talk about a market that is relatively untapped that I could see poised for a breakout over the next few years. I'm talking about pet insurance. This is another industry that has seen more and more business because people are paying high vet bills and getting sick of it, so they want insured pets. They want that coverage. And the number one pet insurer out there right now is Lemonade, ticker symbol LMND. Even with the current dip in the market, Lemonade is still trading over $100. However, they have taken a substantial dip in the past few weeks, as have a lot of our stocks. And if you are thinking about jumping into the insurance industry as a whole, this may be a good time. Remember, just this past January, Lemonade nearly hit $200 a share, and now they're teetering around the $100 mark. Lemonade is tapping into the pet industry with their pet insurance, and I believe this is going to pay off for them massively in the future. By the end of 2018, 2.43 million pets had insurance. This number went up by 17% from 2017. The average monthly insurance premium for all dogs is $43. Now, you ask any pet owner who has had to pay for a major procedure or two, ask them if that $43 a month is worth it overall. Do the math. I can help you out. Yes, it is, considering what I have paid in vet bills. Now, Lemonade still offers all the other normally insured stuff like cars, homes, life insurance, even renter's insurance, etc. I would love to see a company like Petco and Lemonade team up. I believe it could be a win-win. And I also believe that the Lemonade's pet insurance could be a gateway for people that get it to Lemonade's other insurance offerings. Some of the world's biggest companies are even offering pet insurance as an incentive now to entice young, talented people to come work for them. Companies like Chipotle, Hewlett-Packard, Delta Airlines, T-Mobile, UPS, Walgreens, etc. The list goes on. So this is a growing industry that in the next decade will be a common thing that everyone is offering. The market dipping right now, Lemonade is sitting at a very tempting position. Even with that dip, they're still up over 100% on the year, I believe. And if they were to fall into the 80s, 70s, I'm going to gobble up as much as I can because this is an industry disruptor that I really, really like. Where insurance isn't going anywhere. They're making insurance affordable and much more convenient. And I 100% believe that you're going to see Lemonade at $200 and $300 a share over the next couple of years. They were already at almost $200 just a few weeks back. So $200-$300 is 100% feasible in this market. Now, we got to get through this dip, but right now it's presenting a buying opportunity that you may want to take advantage of. Lemonade is a great buy right now, I believe, at this price. This time last year, the last company on my list was trading for around $28 per share. Not far from the Petco numbers. The company that I am talking about is my beloved Chewy, ticker symbol CHWY. Just a couple weeks ago, Chewy was around the $120 mark, giving them a 300% on the year return. With the market dipping, Chewy is now sitting at the $90 mark at the time of this filming, which is still a 220% return on the year. If you don't know, and just to sum them up, Chewy is owned by PetSmart and is an e-commerce business that offers pet supplies, medications, etc. They also offer subscription services to have items like dog food delivered on a schedule and are working on a 24/7 vet virtual visits, which could be incredibly convenient to us, and they have been growing at an incredible rate. Rumor has it they could be offering more than pet products at some point. Remember, Amazon started out as a bookstore. Now look, Chewy may even still see some more dip coming up in the future, and if that happens, I am buying that dip because I believe this is going to be a major company moving forward. Credit Suisse stated in their research note that they expect to see Chewy reach a price target of $121. They previously predicted $104, and that was reached. With the levels that Chewy is teetering around now, I would highly consider starting a position in Chewy. If I had to choose right now between Chewy and Petco, I would have to lean Chewy just because they're a little more proven to me, and with their finances and their numbers, and they have more data to kind of mull over. Petco will get there, but there's just not as much there right now because they just came to market for the third time. If I didn't have as much capital and wanted to bet on a company gaining 200% fairly quickly, then I would have to go with Petco. They could have a huge run coming up in the future and are super affordable right now to those of us that don't have as much to throw at a company but want to be exposed to this industry. To sum up the battle between the two, Chewy is more proven, but Petco offers more growth potential in the short term than Chewy does. But so you have to pick where you think that value lies at for yourself. As always, I'm not a financial advisor. I'm just a guy on YouTube, but I do hope your stocks stay green. I hope you stay safe, and I hope everyone out there takes care.